Hi, welcome to Control and Compound with Darren Mitchell. I'm your host, Darren Mitchell, and today we have a great podcast talking about cash flow positive properties. How do you find them in today's environment? So we're joined today with one of the most respected and well regarded real estate coaches and advisors in the country, Paul DeBruzzo. Paul, how are you today?
Great. Thank you for the kind words. I'm on the balcony today, just enjoying some fresh air while we do this.
That's awesome. And you're in Southern Ontario. Whereabouts you right now?
Right now, I'm in Woodbridge. I'm actually taking my nonna, as we call it in Italian, to the airport. She's going back to Italy for the summer. But normally, I'm in Oakville, by the lake. Great spot if you're in Southern Ontario.
Yeah, beautiful spot. I used to live in Burlington. I love that area. So Paul, if we just kind of talk a little bit about your background, I guess at the end of the day, you are still or you are a real estate agent, but that's just a small sort of portion of what you do. It's really the coaching, the education, and the mentoring. But I want to go back and how did you first get into real estate? Was this something you were 5 years old and said, I want to grow up and be a real estate investor?
No.
Like I
No.
grew up and I said I want to get in the insurance business. I remember primary that was no. How did you do? When did you get your first property? How did you get in the real estate market? What spurred you?
Well, believe it or not, when I was a kid, I always wanted to be a fireman, and ended up doing that. I was a fireman in the city of Toronto for just about 10 years. And
Oh wow.
so it was never an aspiration to, you know, or become a real estate investor full time or do as much stuff as we've done. That sort of came afterward. And right about the time I was getting hired to the fire department in Toronto, I also purchased my first property that year. So it was just before I turned 25 that I did get my first property. And then,
So
just
and where was that located?
that was in Hamilton, Ontario, you
Yep.
know, and I don't mean this as a shot to Hamilton, but back in the day, everybody laughed at us. They called that the armpit of Ontario. Oh, what I like to describe as a New Jersey to New York. That's what Hamilton is to Toronto.
Yeah, I love going to Hamilton now. I lived in Hamilton right out of university. I graduated my MBA and I was working in Burlington at first, couldn't afford Burlington. So I moved to Hamilton right across from Cops Coliseum. And I got to tell you, in the 90s, that was not the place it is today. But today I drive by there and it's just a beautiful city. So you bought this place. So you on a firefighter salary, you're able to buy a place in Hamilton. And was that a rental or were you living there?
Well, yeah, at the time that I bought it, I wasn't even getting paid yet. I had gotten hired on paper, but then you had to wait and go through the training and then do this and then, actually get on the truck. So I was making scraps as a roofer. I used to be a roofer back in the day in my late teens and early 20s, believe it or not. And, I had saved up a little bit of cash and, with little financing I could get, I was able to qualify for the huge amount of $239,000.
That's beautiful.
Yeah,
Do you still have that property?
I do. I do. I do. I still have that property. For a while, it was probably my worst property. I did a rent to own there. I won't make it a long story, but I ended up getting sued. We closed on this. We did this whole thing with rent to own and the option payment. Got great people, and right away we had a flood in the basement, a little one. Some water came in through the foundation. They got upset, thinking like I was trying to sell them like a piece of crap kind of house in a couple of years when they were ready to buy. And we had just closed, so me being a rookie, I went back. I didn't fix the problem right away. I said, you know what? These sellers were trying to hide something, and I sued the seller who I bought it from, and we ended up winning, and we got some money back, and then we fixed the problem. But in the meantime, that whole 6 month period, I had not fixed the actual issue, and the tenant got mad. Then the tenant tried to sue me to get my down payment, his down payment. So should have just fixed the problem, right?
Yeah.
Easy answer. But that was a learning property for me. Then I had a cycle of bad tenants, and then you know I had all these other properties. I'm like, what is wrong with this place? So I finally changed the strategy there from a single family rental after the rent to owns kind of failed, and I turned it. That was the first property I turned into a legal duplex.
Oh, great.
So I was able to, what I like to call value add. It was a value add. Even though I already owned the property, I spent $140,000 fixing the property and finishing the basement, and converted the basement to a legal suite. And we went from generating, what was it, $1,700 plus utilities per month for the whole house, to making 1,900 on the main floor, and like 1,650 in the basement plus utilities.
That's incredible. That's
So, and then we refinanced, and use that money to do some other deals. And that's your, what people like to call BRRRR properties. I kind of don't like that word. I like to say value add investment.
yeah.
Sounds better. But that was my first kind of conversion, and we've done lots of them since then, and done some much bigger deals also.
So you did the first one. You had learning curve. You learned some things. How soon after the first one did you buy your next property?
So in that first year, we bought three properties. So, and then the brokerage that I was buying, the real estate brokerage that I was buying them through, they're like, hey, looks like you like real estate, obviously. Hey, do you want to come work for us? And I said, no, I hate realtors. I'm never coming to work for you. But slowly they sucked me in. One of the nice things about being a fireman is everyone's got a side gig. That's just the way it was. Most of the guys are electricians or plumbers or work construction and build fences and do landscaping. And my side hustle was working with other investors. I was a realtor, but you know, I didn't become a realtor to be your favorite listing agent on the street or something. I became a realtor to share my knowledge and kind of work with other investors who wanted to do things that I was doing, like buy properties, build cash flow, get some autonomy in your lifestyle. Use that cash flow to essentially improve your lifestyle, whatever you got going on, whether you're a family or you're an individual. And that's kind of what we've been doing for the past, I think it's just past 11 years now.
Wow. So you had three in that first year, and then was it all the same kind of thing, same Hamilton area? Were you expanding around? What
Yeah.
was
I,
the
I did one in Hamilton, two in Hamilton, and one in Cambridge, Ontario. So Kitchener Waterloo, Cambridge is another really nice investment area that we're in a lot, west on the 401 from Toronto. And that one, we also did a rent to own there. They didn't end up purchasing the property, so we converted that to a single family rental. And another one in Hamilton was a student rental. It was by Mohawk College,
Yep.
and we had that as a 6-bedroom student rental. That was another high cash flow property that we still have today. Does really well for us.
So you started buying single family, duplexes, triplexes, kind of there, and then through the last 10, 15 years, you've really evolved. And what are some of the cool things? I know you love the vacation rentals. You've got some courses on that. Explain to me that the first is it Turks and Caicos, your vacation rental, the first one you had?
Yeah, we were always going on vacation. I enjoy the hot weather and the beach, and we're trying to escape every winter as many times as possible. And Mexico was our kind of our favorite place, Playa del Carmen and Tulum and Cancun, that side there, the Riviera Maya. And my business partner and I, Andrew, he also works with us, and we have a bunch of properties together. Also, we're like we're coming down here all the time. We like the area. We have friends here. Like, let's buy a place in Mexico. So we started investigating that, and not that Mexico is a bad place, but it made more sense just to go there and rent if you're going to be there for an extended period of time, right? Unless it's a screaming hot deal. So we just started investigating different places. I remember Belize and Costa Rica, and I just happened to go to Turks and Caicos with my wife before our first daughter was born, and we were like, "Wow, this is beach heaven, number one beach on earth," and kind of low key, but really nice, relaxing vacation spot, and really high demand for rental because it's a small island and there wasn't much inventory. And then when you get off the plane there, you're driving down Leeward Highway. The first thing you see on the left, and if you're Canadian, it's going to be a head turner, is CIBC. You're like, what? And then you see Scotiabank. And you're like, what? And then a little bit more, you see Royal Bank. You're like, what's going on here? But it's not Royal Bank of Canada. It's Royal Bank of the Caribbean. It's, you know, Scotiabank of the Turks and Caicos, right?
Yeah.
And the next morning, I was there, like knocking on the window, like, "Let me in." Little did I know they opened. They're on Caribbean time. They open at like 10:30 in the morning. It's crazy. So we walked in. I'm like, "Hey, how do I get a mortgage?" you know, I figured there'd be some translation from Canada. It turns out they do offer mortgages, but not to people like me who have a bunch of properties, right? They like the different profile, like the retired person coming down there who's going to spend a few weeks, like very, very risk adverse type of thing. So, long story short, we ended up buying this property in cash in Grace Bay, like kind of the main tourist area. And we refinanced a few of our properties each, Andrew and I, and we bought the place in cash. And at the time, on paper, it kind of felt like a terrible investment because if we had taken that cash and bought up even more properties in Canada or Toronto, Hamilton, whatever it was, St. Catharines, our ROI would have been uh, on paper much higher than the cash flow we were getting from this one property. But a few years later, we learned that what, I wouldn't have traded it for the world because we might be getting a lower ROI with that money, but we're getting a much higher ROL. We're getting a return on our lifestyle, right? Having a
Return on
property,
lifestyle, I like that. Return on lifestyle.
yeah, yeah. It's we're trying to trademark that, and it, that's what it's about. Like, if you're, my big thing to people is new investors and even ones who've been around for a long time, and like if your portfolio is not improving your lifestyle or giving you what you want to get out of it, why are we doing this? Like, what's the point? Like it's supposed to give you something, some personal gain. So when people come to me and they say, well, Paul, I want to have 10 properties because I want to retire from my job, I'm like, okay, great, then what? And a lot of times I just get a blank stare. No one's thought past that point. I'm like, well, okay, you retire from your job today, what are you going to do tomorrow? Are you going to sew sweaters for your neighbor? Like, you're going to plant a garden? You don't want to work anymore? Maybe you have a passion for art or something else. And what does that mean to you? And if you can attach your real estate goals or your investment goals to a personal outcome, the how you get there in between doesn't matter. Whether it's 10 properties or 2 properties and an insurance policy, right? It really doesn't matter. That's a means to an end. So I want you to, enjoy the lifestyle you want, and I want to be a catalyst to help you get there. And I think the insurance stuff you guys do is a big tool to help you get there faster.
Thank you for that. Okay, and then today, when you're helping people with that return on lifestyle, is it still Turks and Caicos? Are you looking are people buying all over? Where's the most popular place to buy these days?
Well, I mean, outside of Canada, I mean, we educate on what we know on the island, but I mean, in the last 2 years, given what's been going on in Canada, a lot of people are going to Mexico, going to Costa Rica. Turks and Caicos is fantastic, and it's you can make some really nice income there, but it is expensive. Like,
Mhm.
it's Bahamas type of pricing and expense for construction. Everything has to get flown in. Shipping's expensive, right? So I think a lot of people have gravitated to other Latin-speaking countries. But if you have the capital and you want to explore, and you like Bahamas but are interested in something else, Turks and Caicos is a fantastic option.
Okay. And tell me about, just give me a quick sort of history. I'm fascinated. So you're like at the time, what, 30 some years old, and you decide, hey, I should start a subdivision. Are you and your partner subdivision? Like, how did this all come about that
Well,
that big project you've done? How did that come about, and whereabouts was it?
so I'll give you the background. Like, when I was uh, retiring from the fire department, like it was a tough thing to do. Like, I was just overwhelmed. Like, I have a wife, I have 3 daughters. I have a real estate portfolio. I have this career as a real estate investment advisor, realtor, helping people buy and sell, and then on top of that, trying to be a fireman. It was a ton of stuff to maintain. So it took me some time to decide. But once I left that job, uh, I, $120,000 a year kind of disappeared, right? And I was okay. I was still making money in our other business, but you know, the question I started to ask myself is, now that I have this big portfolio, you know, how do I rearrange the assets and extract some capital to do other investments? And one of them I did was like your insurance policy, and another one I thing I did was starting to learn developments because I wanted my portfolio to create cash flow, future money, and I want to use the equity I have to create now money. Like money goes in, money comes back out with profit within, you know, a few months. Could be a flip. You know, developments usually take a little longer than that, but they're bigger paychecks. And that was kind of where my comfort level was. Right, pick a project, kind of work on it, extract as much value as you can, and move forward. So I connected with people, and you know, one gentleman in Niagara region, I kind of felt was an honest person. He had deals available, and I ended up being the JV partner. So he did the development and building stuff, and I put up my money. And I'm like, Drew, I just want to learn, you know. So I learned the game. We did a couple of small deals. They worked out okay. And then he had an opportunity for a big one, and I'm like, well, that's it. We're in. Like, if it's not now, it's never. So that's how we kind of got in, and that was I would say, you know, we made some mistakes for sure. We still came out okay, and it was profitable. It was a good project and everything. All the units are fantastic, but we made some mistakes, and it was like I feel like I have a university degree now in how to
Yeah.
develop land and then build properties.
So
Right?
how many units did you end up building in this piece of land? Was it outside Welland? Where exactly was it?
It was in Font Hill, Ontario. Just
Okay.
it's a kind of a upscale suburb just outside of St. Catharines, in
Okay.
between St. Catharines and Welland. And the land, we had carved it out into 30 townhomes. Okay, and then midway through the project, COVID kind of hit, and our lender, who was doing the construction financing, all of a sudden decided to change the terms, and they wanted more money up front. So we decided to continue to build, but just build less property. So we built 18, and the other blocks of townhouses, the other 12, we sold to another developer to raise some capital.
Right.
Uh, and that's the beauty of doing developments from raw land. Like it takes some time to get through, and it's a major pain in the you know what. But you know, you don't have to dig a hole to make money. Like you're doing, getting the approvals, doing the design for the floor plan, the elevations, and once you get that stamp of approval, which we call site plan approval, your land can double, triple in value sometimes, right?
Mm.
And so we were able to sell that land profitably, use that money to continue to build, and obviously create another profit center there. So it worked out well.
So start to finish, from the time you kind of closed on the land until you were selling places, how long a timeline was that?
Until they all closed, built and closed and complete, it was about 3.5 years.
Wow, that's quick.
Yeah, I mean, it was a smaller site, and we probably could have done it faster. We could have probably done it in just shy of three. You know, knowing what we know now, the next time will be faster. We're raising money actually for another project of 26 townhouses, so that'll be the next one on the block.
Great. What I love about you, and I think why we get along so well, is full disclosure. Paul mentioned we do. Paul is a client of Control and Compound, but we're education based advisors, right? We're like, we don't sell anything. We're education financial educators. You come in, we educate you about cash value life insurance, infinite banking, and then at the end, people are like, yeah, great, I'm in. And you've really taken it to the next level in the real estate world about education based. So tell me a little bit about how you help investors educate. What avenues do you use to help educate investors in making better decisions?
Yeah, I mean, uh, we have a funny saying that nobody calls us because we're realtors. And in fact, if you called us and your first question was like, "Sir, what's your listing fee?" Like, we might hang up the phone on you. Like, we don't necessarily want to be your realtor. We want to be your advisor. So, uh, the way we lead is with education. So monthly we'll have what we call master classes. And before COVID, we were doing them in person because that was the thing to do. And during COVID, we kind of switched to doing Zoom, and just before COVID hit, like we were getting 80 to 120 people. I had to rent the auditorium at Sheridan College there in Oakville for the second last one before kind of COVID hit. But since then, we've been doing Zoom, and we're hoping to go back to in person as soon as it makes sense to do that. And at the front door, we would ask for a small fee, a $10 or $20 fee, and we'd use that money to help a local charity called $1 Million Smiles. And we educate people. We pick a different topic every month. It could be about multifamily or development or short-term rental, Airbnbs, student rent, whatever. Or well, sometimes I'll bring in a mortgage broker, and it's a great place for people to come together, network, and it's a good place for people to know and understand who we are and what we do. And once they begin to trust us, then people want to work with us and they want us to help them, build a portfolio and have the kind of results that we've had also.
Okay, and people can find out more about that at your website, Paul DeBruzzo, pauldebruzo.com.
Yeah, yeah, pauldebruzo.com. If that's a mouthful, you can go to expertinvestoracademy.com also. It'll lead you to the same page, and you can see some of our master classes. You can jump on our newsletter, our email newsletter. That's probably a good idea if you want to stay in touch with us about our events and what's going on, both online and in person. And if you want to have a one-on-one with me about if you're Ontario and you want to talk about real estate investments, if you're new or even if you're seasoned and want to improve on what you're doing, you can book a session with me directly out on the site.
I love real estate groups, and I love I just see from clients, the ones that, aren't afraid to spend some money on their education to, you know, they'll drop 100 grand on their kids' education, but they don't want to spend any money on educating themselves to make millions of dollars in real estate. It just shocks me. But, you know, in my business, it's always, well, my parents, my banker, my advisor tells me I should, put money in an RSP and wait 40 years and do that. So I love when people come together with like-minded people, because you must have a lot of, newish investors that, oh, the bank tells me this, my advisor, my question always to them, well, is your banker rich? Is your banker a real estate investor? Is your banker an entrepreneur? And then, well, why are you taking advice from your banker? Where you've been there, done that, and you're around people every day that this is the world. This is the real estate world. Do you get a lot of that where people say, "Well, someone told me I should be doing this or should be doing that," or by the time that they get to you, they're they're pretty
I think
interested.
people in Ontario, I mean, results speak for themselves too. I mean, everybody knows how prices have gone in Ontario, right? But what's it called? I think by the time people come to me, they're convinced that real estate is probably a good option, but they don't know what their next step is. And they need somebody to hold their hand because, most people's idea of buying real estate is to close their eyes, you pick a condo floor plan and hope it goes well in 3 years when it's built, or 4 or 5, whatever. And for a lot of people, that's worked out, but it's not a sophisticated way of investing. And if we can just apply that much, a little bit of sophistication to what we're doing, and uh, uh, capture some of those gains over a long period of time, but also add a cash flow component, your results are like tremendously better. And that's kind of what we want to do, but it takes a little bit of work, and it's not for everybody. So uh, uh, we do our best to educate so people know what's up.
Okay, so let's talk cash flow positive. That's what I want to get to today, because just about everyone, I end up talking to, especially people that don't have a lot of experience, it's where do you find cash flow positive properties, especially in Ontario with prices, half a million, million, 2 million and plus. Like, how can you possibly find a place today and have the rent to pay all your expenses and have cash flow? Walk me through an example. If someone came to you and was educated and they're learning, like, what kind of properties are you buying? What are you doing to them? Because you run the simple math and you go, great, I go buy a $2 million house in Toronto. There's no way I'm going to rent that enough to justify that purchase price. So what do you do to get that positive cash flow? Can you run me through an example?
Yeah, Toronto is very difficult to do that. So we're in what we would call secondary and tertiary markets, like a Hamilton, Kitchener, Waterloo, Cambridge, a Barrie, um, or not Orangeville, Barrie, Aurelia, excuse me, to the east, like Pickering, Ajax, would be Oshawa for the most part, Belleville even, and southwest, Hamilton, Brantford, Niagara region, St. Catharines. Those are the areas that we're in the most, where the ratio between the rent you're going to generate and the purchase price, even though prices have increased, is still positive. Meaning you're going to generate enough rent to create positive cash flow. Once we're in those markets, we can make things work. And if Darren, if you were a new investor and I was talking to you, I'd probably show you like two or three basic examples. I would say, look, this is a single family home, right? A bungalow in Kitchener, a two-story home in St. Catharines. 1,800 square foot two-story home, or a 1,000 square foot bungalow with a nice basement. Basic stuff, starter home category, and you're going to be able to generate 27, 28, $3,000 a month in rent, and your expenses are going to be this. At the end of the month, you're going to be left with $200 in cash flow, right? And is that $200 going to change your life? Probably not. But when you think about it over a period of 3, 4, 5 years, and the way the properties appreciate, the way the tenants pay down the mortgage, you're going to gain a lot of equity, and with that equity, you can use that to buy more cash flow positive properties like a triplex or a fourplex. So if you can't start with something that like that because of your approval levers, or you just don't have the capital, you have to start with something basic, right? And that's where we start with single family. Now, we can also look at a single family home with an in-law suite, so aka a basement apartment, right? And now a basement apartment's a stigmatized word. You might think of like a dungeon in the basement with like low windows and stuff like that, and those exist, believe me, right? But there are also some nice apartments out there, and if you can rent the upstairs and downstairs, you're gonna generate significantly more rent. On that same house that I'm describing, in the single family model, you might pay somewhere around the same type of money, even if it's 30, 40, or 50,000 more. But instead of generating 27, 28, 3,000 a month, you might generate 3,500 to 4,000 a month, right? And thereby creating 500 to $1,000 a month in cash flow.
So for people that aren't, in the renovation slash building world, like how does has a you know as someone like me who's not handy, how would I ever go about? How do I find someone to add a door, fix the windows, put a bathroom in? Like I don't know anything about that. How does someone that doesn't have those contacts deal with that?
Yeah, fair enough. And for some people, actually, a lot of people, I say 50% of people are you're describing are like that we work with, at least from the beginning, right? And there are lots of properties that are what we call closer, or are generally very turnkey, right? Where we don't have to go in. There's an apartment already there. It might need some paint. I don't consider paint like work. so, uh, but even if you had to do a little paint job or something, or change some locks on the door, or you put a mirror in, change a toilet, little stuff like that. Just given what we do and who we are, we have a large networks, and we can set you up with a handyman to help you with that, right? But there's lots of options for people who don't want to do any kind of work, or even manage a contractor. Little under $1,000 work excluded.
So adding a unit. So what's the environment in Southern Ontario from a municipality standpoint? Adding those units. Like if you have one, can you add 3 units? Can 3 unit? Can I add a unit to a fourplex? Like what's the, in general? I know it'll be slightly different in each community.
Yeah, well, Southern Ontario especially has become very welcome to this idea of adding units, because we are in such short supply for good quality rental housing. So these municipalities are being forced to modify their zoning bylaws to allow these what we call ADUs, additional dwelling units, or uh, there's a bunch of different terms, but they all mean the same thing. You're adding a registered unit to your home. You know, so they're Toronto, Hamilton, Brantford, St. Catharines, Welland, Kitchener. Waterloo, Barrie, all these places that we're in all have a clear roadmap and pathway on how to register your unit. It's clear. I didn't say it's easy because it can be a pain in the you know what going through this and inspections, but that's just the norm when you're dealing with real estate stuff. The good news is when you go through a process like that, if you bought it for X, and you put in Y amount of money to fix your basement into a registered suite, your Z, your formula at the end, you're going to make money on that. So if you bought it for 600 or 700 and put 100,000 in, it's going to be worth more than what you paid for and what you put in, right? You're going to get a return on that work you're doing.
And when are you gonna get the money back that you put in on the renovation? Like, if you put 100 grand in for the renovation,
Mm-hmm.
is that just money on top of the down payment, and that's, you know,
I'll give
20.
you an example.
Yeah.
I was just on the phone. I won't mention names in case she doesn't want me to, but a young couple in Burlington, actually, with two kids, they bought a home last year, a nice bungalow in Hamilton. We keep talking about Hamilton. There's so many other places, but this one's in Hamilton on the mountain. In multiple offers, we won a bid, and she paid seven 735, right? Which at the time we thought was a little bit more than market value. Now she spent $180,000, a good chunk of money, finishing the bottom, finishing the top nicely, landscaping. Like, she did a fantastic job, and I'm just finishing one myself, and I'm like, hey, you did a better job than I did, and she just got appraised at $1,050,000.
So she paid 730 change, put 188, so she's into it about 900 grand,
Yep.
and she had it appraised at 1,050,000.
Yeah. So she's gonna pull out, already approved, 80% of that 1,050,000, right? And both of those units are going to generate. She's just getting applications now because I'm walking her through that. That's another thing we do is, once you close on a property, we don't just throw you to the wolves. That's where the kind of the real work starts. We're kind of coaching you and holding your hand throughout the process so you're not making mistakes. That's why coaching and mentoring is so important. So she's just going through her application process. She's going to generate about 4650 a month between both units
Okay.
plus all utilities. So even with the higher refinance amount and the higher debt amount, around 800 and something thousand, her new mortgage is going to be, right? She's still going to cash flow and cash flow well, right? And then now she's going to take that money she gets back from refinancing, and she used her line of credit. So she's going to pay back her line of credit, and then guess what we're going to do? We're going to go out and repeat the same process, use up that line of credit again, then refinance and put it back, and refinance and put it back. And that's probably cycling through your head right now if you're listening to this. I would say a good 70% of people are leveraging their line of credit on their personal home in order to fund that initial down payment.
For the income property. Yep.
Correct.
And the
Yep.
renovations if they're adding a unit. Um,
Correct.
now, some other strategy I know you use is what's called a legal lockup. Um, so tell me what a legal lockup is and how that differs from adding those units. Sorry, we'll finish on the adding the units. So you talked about, the municipalities being pretty generous, but is it usually one unit you can add to most things, or is it depending upon
Oh,
the town?
depending on what the zoning allows. Now, some municipalities like Hamilton and Kitchener, so far those two, I think Barrie too, but Hamilton, Kitchener for sure, they're allowing what's called garden suites. And a garden suite is kind of exactly how it's described. It's a suite in your garden or in your backyard, slab on grade, so no basement. Think about it like a glorified pool house. You know, like a one bedroom. I mean, if you have the room, a two bedroom, I think those are set up to be like a one plus den, something smaller than that. And you built literally a third suite in your backyard. Now you have to have the right lot width and depth to do that. You can't just buy anything and do that. But it is another strategy. So if you already have a duplex, now you can add a third unit. And the beauty about that is you've already paid for the land. So, like this lady who I'm just describing, she has the space to add a garden suite, right? So if she bought the place for 730, she's going to refinance at $1,050,000, and now with that refinance, she could go and add a third unit and then refinance it again. the beauty is she's already cash flowing on the duplex and she's already paid for the land, right? So once you've already paid for the land and you're adding, and let's say she spends another 150,000, but generates another, I don't know, 1,800 or 2,000 a month, right? If she generates 2,000 a month, that's 24,000 a year on your 150,000. Like that's a pretty good return in the year,
Yeah.
right? You're going to repay yourself in 6 years essentially. Like that's ridiculous. Like you can't get that anywhere
So,
else.
so
At least not many
you,
places.
you get the first unit. She had the first unit for like 735 a door or with unit, and then she added a door for 180, and then she could add another door for 150, 200 grand. So the fact that she already owned the land, you know, would you add an extra unit? You paid 800 grand or 700 and some grand for the first one. That's pretty simple math.
Yeah, yeah, you would do it, and someone might be saying, "Wow, who would pay 700,000 for a property where you have to, do all this work?" And I agree with you. I wish we could pay 400 or 500, but that's just not the realistic. It's not realistic in the marketplace today. And prices have come up, but without going off on a tangent, like it's not the prices have come up; it's that the value of your dollar has decreased that much, making real assets more expensive. That's what inflation is. So don't blame us for inflation. But the beauty is rents have kept up. Rents have kept up with the price increases. And so we're still able to cash flow even when we're buying something at 600 or 700 or 800 or whatever. Okay.
That's
We just did another deal in Hamilton a few months back. It was a $1.3 million fourplex. And in the basement was room for a fifth unit. So it's a no brainer, right? If you have the capital, it's a no brainer.
So the adding a unit strategy, the first place to look was probably the basement. And you don't look afterwards, you look before you buy. So before you buy, you're showing people properties that, hey, this can have a basement at it. That's going to be your least expensive way to add a unit. Then we talked about the gable. What's it? Gable house, garden house,
Garden suite.
garden suite. So garden suite, you need the land for that. So a lot of, I know we looked at a fourplex the other day, and there's about 3 feet of land that's not used right now. So that one's not going to
Oh.
be in there, but you get the extra land. Now, what about this legal lockup? So that was adding an actual unit that you're going to rent month to month. How does a legal lockup work a little differently?
Well, I might be confused on the lingo. You might have to tell me what a legal
Well,
lockup
on
is.
your land development deal, you had some like bedroom suites that you were renting that people could rent on Airbnb.
Oh, yes, yes, yes. Okay, yeah, we had just given the location in Niagara, the designer had thought it was a good idea, and we kind of talked about it and did our research after to build the townhouses um, with a suite that was made and designed to be catering to short-term rental people. Let's put it that way. Long explanation. So, give you more context, these were slab-on-grade townhomes, no basement, and you'd walk in and there'd be stairs heading up to the second and third level, right? And in that main level behind the stairs was just an extra bedroom, right? So instead of having a big bedroom, we designed it with an in-suite washroom and a Murphy bed, and around the back, instead of having like a sliding patio door, you have like a French door with a lock on it. So if you wanted to, you could rent that out a couple nights, of the month and generate, on $100, $150 a night kind of thing. Or when you're away, you could rent up and down or do whatever. Just options. People need extra living space. So and it was an upgrade that you could add to your unit if you wanted to.
Yeah, again, one of those things. If you plan ahead, it's going to be a lot cheaper. So you wouldn't have to use it for an Airbnb, but if you're, especially when you're starting out, you need help probably paying that mortgage for a lot of people buying their first place, and you can get another $1,000 a month coming in from a bedroom you're not using anyway, and they're not in your space, right? You don't want. I don't like renting those rooms in your house, and you get strangers in your
Yeah.
house. Well, no one's going to go for that. But when you can have that separate entrance and a locked door between you and the rest of the unit, I love that idea.
Yeah, yeah, that was a neat thing that we did, and Some people took advantage of it. Some people didn't want to, and that's fine too. But yeah, I think in Ontario, we're there's such a demand for housing because of all the immigration we're getting. We're already short housing to begin with. Prices are expensive, which means there's incredible demand for quality rental units. You just have to get creative. The most creative investors are the ones, I think, doing the best because they're taking their property or their land, and they're creating the most units they can out of it, and delivering a product that the market wants, right? And they sell it, they make good money, or they keep it and they make very good cash flow.
What I love about the Toronto, Greater Toronto, Southern Ontario market, and even the Vancouver, the same thing. It's the rest of the country is eventually going to start doing the things that you guys are doing, but you're on the leading edge because you have to be, because the prices are so high compared to some other parts of the country where unless you're creative, unless you have some skill set that, you can find a miracle property, that creative is going to make you have that positive cash flow. And then if things continue the way they have the last 100 years, from an appreciation standpoint, like, you know, I live in the East Coast and I own most of my property in Ontario because I'm a believer in that region long term. You could buy in small town, rural, whatever province, and you may see appreciation, you may not, but if you can have positive cash flow and the kicker of appreciation down the road, there's your short term money and there's your long term money. Um,
Absolutely. Throw in
yeah,
an insurance policy and you're covered, right?
exactly. Take control of your money and do both. It's an and asset. So give me
That's
one
right.
more example, Paul, before we wrap up. An example of someone coming in, buying that property, and turning it into additional units or doing something to make it more cash flow positive.
Yeah, let me think of something unique. I mean, um, to be honest, we're never really reinventing the wheel. We're just reusing the same strategies with different properties all the time. Like,
But you have a system, right? The process is the key. It's
yeah, the numbers in the process are what makes the most sense. Like, I'll give you another example, a very basic one. Like, sometimes people don't have the capital. They might think, wow, that example Paul described, buy it for seven, it gets valued at 1,050,000. That's a fantastic example. But I might be able to buy the property for seven, but I don't have another 100 or 150, 200,000 to do a renovation. Well, that's kind of where we just slow things down a little bit. So we might get a single family home, a bungalow, that's rentable in today's condition. Like, it doesn't have to be a piece of crap or anything. It could be a nice, livable 3+1 bedroom, 2 bath bungalow. The key is does it have a good lot that will allow us to do a duplex conversion in the future or add a garden suite in the future? And does it have that side entrance? Most bungalows do that were built mid-century. And if we have that, we can just slow things down. It's not buy it, convert it right away, refinance. Maybe it's buy it, rent it for 2 years or three, wait till it's gained some equity, refinance it, then do the duplex conversion.
mm,
There's nothing wrong with that. There's nothing wrong with that. If you can't do it all right, if you don't have 300,000, 400,000 in cash or equity built up, you don't have to shoot for the sun every time. Sometimes shooting for the moon is okay, right? uh, and we can mix it up. It doesn't have to be just that kind of stuff. When we're building a portfolio, if you tell me, hey, Paul, I want to quit my job in 10 years, well, that might change how we invest in real estate. Instead of doing 10 pre-constructions, maybe we're going to buy some cash flowing properties, right? you know and if you're starting and your capital is limited and you have enough for one property, maybe we might do one cash flow property and then one pre-construction, because pre-constructions, they're the tool in the toolbox. They're great for putting cash in, not doing anything, not even qualifying for financing. And if it's a good project in 1, 2, 3 x amount of years, you're going to have more equity there and you can sell it, turn your 100 into 200 or 250 or 300, and then use that money to keep investing, right? And buy another cash flow property.
creative. Always be creative. I love
Yeah,
that.
absolutely.
Okay, so if people want to learn more about you, Paul, and find out how to work with you, and just do that, how's the best way to get a hold of you?
Yeah, so at pauldabruzzo.com, if that's too much of a mouthful, expertinvestoracademy.com, both will forward to the same website. And if that's too much trouble, you can just email me, paul@rockstarbrokerage.com, and we can talk. If your clients are yours, Darren, I'm happy to just sit down and have a conversation and see how we can help you.
Love it. So, last question. Have you ever done the exercise? If you look at, the hundreds or thousands of people you've worked with and helped since you started in this real estate world, and the many, many, many projects you own and were involved in personally, have you ever added up the total value of all those and say, like, how much real estate have you, touched in the past 10, 15 years?
Wow, man, I would say it's between myself, the properties I have, and then all the clients we work with. It's got to be like a quarter of a billion, like $250 million worth.
Wow.
You know, yeah, crazy. I mean, we don't own anywhere near that. That's not. I don't want to make a case, but between all the, and we have a lot of clients, I guess. Between all the clients that have transacted back and forth and stuff, and what they own now, it's a crazy number.
And do you have a client that quick last story, had one or two properties, and now you've seen them 5, 10 years later where they have multiple properties, 4, 5, 6?
Yeah, it would be a cheesy. It would be the title or the website would sound cheesy, but Andrew and I often joke that we should make a website called Millionaire Real Estate Makers, because we've made so many. We feel like we've been a hand in so many people becoming real estate millionaires that it's crazy. We just want to make a list,
Real
right?
estate millionaire. Perfect.
Yeah,
Thanks, Paul.
yeah,
Appreciate the
absolutely, man.
time.
Anytime. Thanks, Darren.
All right, take care. Thanks for tuning into this episode. Don't forget to like, subscribe, and hit that bell button so you always know when new content is coming out. For more helpful tips and tricks, visit our Instagram, Facebook, or TikTok pages at Control and Compound. If you want to reach out to us directly or work with us, visit our website at controlandcompound.com. The links are in the show notes below. See you next episode.